and welcome to your daily video, which is called S&P 500 Bear Flag. We will dive into what I see unfolding in the markets and what it means for price moves in equities ahead. This will be juicy and packed. This was the situation yesterday pre-market, before we got PPI that revealed kind of a deflationary whiff, which the market, however, chose to ignore. It will come back to bite it later on. However, for now, let's go. This is the situation today pre-market. As you can see, the level corresponding to ES 5555 has been and is being respected. There is an overshoot to 5570. It had not been overcome, and I identified a level closer to 5600 as the true resistance. Would flipping it turn equities bullish? Not at all. However, this is an important development. This would be an important development if it were flipped, from the point of view of where and when can that short squeeze hit. For now, as you can see, the hourly chart is pretty orderly throughout the week, with the buyers unable to get more than a couple of hours respite. Weekly chart confirmed breakdown. You can see that it's down at the July 2024 levels and pointing lower. Is it going to hold or not? I have a tip, and let's refine the picture further on. Thank you for liking this video and subscribing to the channel. It helps greatly. This is the daily chart. Have you seen equities bottom on Friday? I was doubtful about Friday's squeeze and trusting it. And sure enough, it rolled over Monday pre-market already, and we had seen a similar hope giving a tweezer bottom impression. That's why I ran the poll to see how many of you would be trusting that to mean a reversal. And as you can see, from this bear flag, we are breaking lower. Where is the leadership among sectors? Tech, consumer discretionaries, which I had been pointing to as the key areas to watch, and tech is not at all outperforming S&P 500, and Russell 2000 is actually the one that is relatively weakest among the three indices. Communications, nothing to write home about either. Financials, industrials, where is the leadership? This is looking quite orderly. Chart of the poll revealing to you how evenly you had been split. Technicals point lower. McLaren summation index is still in distribution tone. Breadth as measured by a percentage of stocks trading above, whereas moving averages is not at rock bottom levels typically associated with bottoms. So will we get a flush? Will we get a squeeze first? Volatility metrics that I will reveal further on to the rescue. Not even defensives, as you have seen on real estate, are catching any kind of a bid. Anything to point out more as to the fundamental and macro drivers, starting on the second and third line. Outflows when foreigners cash out of their gains in US stocks, tariff uncertainty, impact on valuations and earnings themselves, and consumers quite split as to the expectations of the future. So is this still orderly, or are we reaching fear that is extreme enough already? This is once again the hourly chart, where you can see that this has the budding characteristics of a breakdown below 5555 as being confirmed. Are we going to see again a fresh bout of selling following the opening bell. There is University of Michigan data coming. Last time they attended on the stagflationary note, meaning low confidence about the future, coupled with accentuated inflation expectations. And I do think it's going to end up this way this time around too. My preferred metric of volatility is this ratio of wicks to short-term forward-looking wicks, and you see it is still quite orderly building up. We have not had a kind of a climatic release when it comes to volatility, panic, blood in the streets moment. A little bit confusing chart, however, clear refusal to go lower, and that's what I think we will see later on today, because any kind of false respite that we would and could get during the regular session would be quickly dialed back Monday, and that is basically my game plan, mirroring the experience of prior Friday and prior Monday. I do not think today would deviate from that in the least. Put-to-call ratio is the one muddying the waters. However, I do not think that this is the one to rely on, and part of our job as traders and investors is to decide what can be trusted, what can be discarded given current market environment, situation, incoming data, whether it makes fundamental sense or not. My joint page will help you select what's right for you based on what and how you trade. I can't stress enough the importance of combining daily analytics together with the premium updates in intraday Telegram channels. Obligatory disclaimer, talk soon.